All right, everyone, welcome back. Ready for another deep dive into what moved the markets today?
Definitely. This is going to be fun, especially after the past 6 weeks of, well, the rally we've seen on Wall Street.
Exactly. And then today, things kind of took a bit of a turn,
Mhm.
right? We're trying to break it all down today using the Market Deep Dive Closing Marks Report.
Our favorite source for all things market analysis.
Yeah, I know there were a few head scratchers for me personally today. I mean, tech stocks, they actually did pretty well, even with the dip overall.
Right.
Like Nvidia actually hit a record high today.
Mm.
And, we've got Tesla's earnings report coming up soon, too.
It'll be interesting to see.
So we've got a lot to cover today.
Yeah.
By the end of this deep dive, hopefully everyone listening will have a much clearer picture of, well, not just what happened today, but why it matters. Again,
Exactly. What does it all mean for your portfolio? Let's
exactly.
try to connect those dots.
Okay, so let's get into it.
Sounds good.
I think first up, we got to talk yields. They're climbing.
Almost 3-month highs.
Yeah. And, for anyone who's like, wait, what are yields? They're basically like the interest rates the government's paying on their debt, right?
Mm-hmm.
But they impact a lot more than you might think.
They do. They have this ripple effect across the market.
It's true. And what's really interesting to me is that the Fed actually cut rates recently, but yields, they're still going up.
Exactly. That's a bit of a head scratcher.
So what's the deal with that? Why are they defying the Fed here?
Well, the report suggests it's likely due to a few factors. On one hand, the U.S. economy is still looking pretty strong, even with some, other parts of the world kind of struggling. And then we have China.
Right.
China just launched this new stimulus package, and that's putting more cash into the global system.
Okay, so even though the Fed's trying to ease things up, it's almost like the market itself is pushing those rates higher.
Yeah, that's one way to think about it.
And that's something that I think, every investor should probably keep in mind. Because here's why, right? When yields go up, it means companies have to pay more to borrow money, and that can eat into their profits, which of course impacts their stock prices.
Exactly.
It can affect dividend-paying stocks too, It might make them a little less attractive if investors can just get a higher return from safer Treasury bonds.
Right. It shifts the balance a bit.
And I feel like we can't forget the impact on the U.S. dollar either.
Oh, absolutely. That's huge.
A stronger dollar makes U.S. exports more expensive, so that can affect international trade, even earnings for companies that, do a lot of business overseas.
It's all interconnected.
Right. It all ties back to these, these global economic forces.
It's a complex web.
Yeah,
It is.
but a fascinating one.
Okay, so we've got yields are up, but then we have the tech sector seemingly ignoring all the drama and holding strong today.
Mm-hmm.
And I gotta say, I think Nvidia's record-breaking performance today is particularly interesting. Is this a sign that big tech companies are still confident about investing in growth?
It could be, especially with these upcoming earnings reports from major chip buyers like Tesla. If Tesla's report is strong, does that mean that companies are still willing to spend big on technology?
Yeah, and if that's the case, that's actually good news for the sector as a whole.
It could be.
And, let's not forget Taiwan's semiconductor manufacturing's report, just stellar last week.
Oh, yeah.
And they're a major, major player in the semiconductor industry, so their strong results also point to continued investment in the tech sector, which, potentially could be good news for overall economic growth.
So it seems like maybe tech is weathering the storm a little better than some other sectors.
Yeah, it'll be interesting to see how things unfold.
For sure. But what about the rest of the market? What are some of the other, winners and losers from today?
Well, real estate took a hit today, healthcare and consumer staples as those yields climbed.
Yeah.
Those sectors tend to be a little more sensitive to those interest rate changes.
Makes sense.
And small cap companies, they're also feeling the pressure, likely due to those higher borrowing costs we talked about.
Right. Yeah. We also saw some, interesting individual stock movements, right? Like Boeing.
Yeah.
Boeing got a boost on news of a potential deal to end a worker strike.
Right. And Kenvue soared.
Yeah.
Reports of an activist investor taking a stake.
Interesting.
And then UPS unfortunately stumbled after an analyst downgrade.
Yeah, just a reminder that there are always these individual stories playing out alongside these broader market trends.
Always. Always something happening.
Right.
Speaking of broader trends, I think it's time we shift gears a bit and talk earnings season.
Yeah, we're right in the thick of it.
We are. And that always adds a layer of excitement and volatility to the market.
What's the report saying about how earnings are shaping up so far?
Well, there's some good news, and let's call it something to watch closely news.
Okay.
The good news is that earnings growth is slightly ahead of expectations.
That's good, right?
Yeah, but here's where things get a little interesting. Fewer companies are beating their revenue forecasts.
Oh, okay. I see where you're going with this.
Yeah.
So even though companies might be making more money, they're not selling as much as expected.
Exactly. And,
Mm.
that could potentially mean trouble for profit margins, especially with inflation slowing down. And you have some companies that are having to discount their products to stay competitive.
So not all sunshine and rainbows, even though earnings are technically up.
Right. It's more nuanced than that,
Complex picture, as always, right?
as always. And it all, connects back to those broader economic forces we've been talking about.
Right. Inflation, interest rates, consumer spending, they're all pieces of this giant puzzle that we're trying to put together.
It is a puzzle. And that's why we have to look at all the pieces, right?
Yeah. And speaking of those pieces, or I guess economic data,
Yeah,
there are a few other points from the report that I think are worth highlighting.
definitely.
Like, for example, leading economic indicators. They actually dipped in September.
Yeah, that's worth noting.
Oh, what does that tell us about potential future growth?
Well, I wouldn't say it's like a reason to panic or anything,
Right.
but it does, kind of suggest that the pace of economic expansion might be slowing down.
Uh-huh.
We've seen weaker factory orders, and that's kind of contributing to this decline.
So more of a yellow flag than a red alert at this point.
Yeah, I think that's a good way to put it.
Okay.
And, this is where things get really interesting because it all feeds into the big question. What will the Fed do next?
Right.
Will they cut rates again? Will they hold steady?
Everyone's trying to predict their next move.
I know. The markets are hanging on every word.
Yeah. The report mentions some upcoming housing data,
Mhm.
like existing and new home sales, and we also have durable goods orders and consumer sentiment coming out soon. That's a lot of data
Oh, it
for
is.
the Fed to, digest.
It is, and they've made it very clear that they're data dependent,
Right.
meaning their decisions will be driven by what those economic numbers tell them.
So no crystal ball, just good old-fashioned data analysis.
Exactly.
Speaking of which, what are the markets saying right now? Are they predicting another rate cut?
Well, futures markets are still kind of leaning towards a cut next month, but
Mhm.
the odds have shifted a little bit.
Oh, interesting.
Remember last week there was all this talk of a potential double cut by the end of the year, and now that seems a little less likely?
Yeah, well, I guess it makes sense that those economic indicators, even if they're not flashing red, are giving the Fed some pause.
Absolutely. And then we can't forget about what's happening in China.
Oh, right.
They just cut their lending rates
Yeah,
in an attempt to boost their own slowing economy.
yeah, that was a pretty big move. Did it have any immediate impact on their stock market?
Not really, at least not yet, but it's definitely something to keep an eye on.
For sure.
China is a major player in the global economy, and their economic health or lack thereof can have ripple effects around the world,
Right.
impacting everything from commodity prices to company earnings.
It's like one giant game of economic chess with all these interconnected pieces moving across the board.
That's a great way to put it, and that's why it's so crucial for investors to stay informed, to really understand these forces at play and how they might impact their portfolios. Whether you're a seasoned trader or just starting out, staying ahead of the curve is essential.
Yeah, it really is. Who knew that events on, the other side of the world could have such a big impact on what happens here in the U.S. markets?
That's also what makes it so fascinating. There's always something new to learn and analyze.
Totally agree. Okay, so I guess let's do a quick recap, right?
Yeah.
We've got rising yields, even as the Fed cuts rates.
Mm-hmm.
Tech sector's holding strong despite, the overall market dip. And we've got a whole bunch of economic data coming out soon that could really, I don't know, sway the Fed's next decision.
Oh, yeah. And don't forget China's rate cut and what that could mean for the rest of the world.
Right.
It's a lot, but I mean, that's why we do these deep dives, to help you make sense of it all.
Exactly. Because at the end of the day, we just want to, make informed investment decisions.
Exactly. So before we go, I'd like to leave you with a thought.
Okay.
Given everything we talked about today, what are you going to be watching most closely in the coming week?
Yeah.
What data points, what earnings reports are going to be most important to your investment strategy?
Are you watching the housing data?
Mm.
Is it the Fed's next move?
Mm.
Or maybe you're like me and really curious to see what happens with China and how their policies play out?
It's definitely a dynamic market.
It is. Staying informed is key, so make sure to subscribe to the Deep Dive for more of these market insights and deep dives into, well, all things finance. Until next time, happy investing, everyone.